Hello, everyone. Welcome back to another weekly watch list video. I'm Matt with Green Bar Trading. Before we get into this video, I'm going to ask that you guys please hit that thumbs up for me. And if you're new, consider subscribing. We have literally new videos just about every single day on the stock market. But this video is something that I do every single weekend, and it's to prepare for the week ahead. And I have a lot to show you guys for this coming week, because this week is a big one. So let's get right into it. We're going to start with our economic releases for the week. So this is our economic calendar. Obviously, when you're day trading, when you're trading our markets, you need to know what is coming up, and especially if you're in a trade or if you're trading futures, anything, you need to be aware of these really important things. So the big thing this week is the Jackson Hole Forum. So that is where the Fed hosts the annual Jackson Hole Forum. You can see right here on Thursday, but we're going to have Fed speak basically all week. Now, what we're waiting from this Jackson Hole Forum, where all the top economic minds come together and discuss economic policy and what it means going forward, is we're going to be looking for those headlines that come out. Now, the only problem is a lot of computer algorithms will be trading these key talking points that they leak out of the forum. So when a lot of these Fed officials talk, some things will come out. There'll be a lot of interviews going on CNBC during the week. It might be choppy. And I think what we're going to see is the Fed is going to highlight keeping rates higher for longer. And I really think that's going to change from that kind of pivot we saw from Powell during the last FOMC, which is, and the minutes that we saw last week, which is where he sounded very dovish, and it led to a very big market rally. I think that was probably a mistake. Keeping rates higher for longer seems like the way to go, because the economy is super strong. The labor market is very tight. And when this happens, and things are running very hot, and inflation is obviously still hurting a lot of the population, they can't take the foot off the gas. So I think that's what we're going to see this week. And if that happens, we could see a stock market pull back and more of an anticipation of a 75-point move in September on the basis point. So right now the market has a 50 basis point move. I think that's the way it's trading right now. So that can also lead to the market pulling on back. So that's really big this week. Earnings for the week. This is what we see. We have NVIDIA on Wednesday after the close, Snowflake, Salesforce. So some of these, tech stocks that have already basically given guidance that's been lower. So going into the print, there's already a lot of bad news baked in. So how the stock reacts after that, who knows? We have Toll Brothers on Tuesday after the close. We've seen the housing market come on down since the Fed started to raise rates. It has, depressed that market. That was in a bubble, so that's good to see. And that's our earnings for the week. But we're starting to get, out of this type of earnings season now. So this is really interesting. Last week, that I always like to look at last week's relative performance, the one day, which we saw on Friday, which was very bad, very bad for tech and, most things. What we saw on the week was energy, utilities, and the defensive as the outperformer. This is what we said last week in our weekly watch list video. We had thought the market was going to pull back because we were so overbought on the RSI, on the daily charts. Most stocks were way overbought, and they pulled on back. Now, what's interesting about this is you have technology, communication services, basic materials, all down really big on the week. When, and I'm going to click here on the 10-year Treasury note. This is the bonds. So this is something that we look at every single day in our Discord group. This has a direct inverse relationship with the bond yields. So when the bond yields go up, this is the NASDAQ. The IXIC is just the NASDAQ composite. You can see here with the yellow lines goes down. So this is just an inverse relationship. When yields go up, the NASDAQ and tech goes down. So that's what we saw last week. We saw the yields really rip. The 10-year is almost at 3%, which is a monster move from where we started the week. It's up 7.2%. The NASDAQ's down 2.3% for the week. So going into this week, you can really start to see, if you hear that hawkish Fed, it's going to make yields go up even more. And if that happens, you can expect the markets to come back on down. So that's what I'm thinking for the week coming up. And then if we look at when Powell is going to speak, because this is very important. Powell is going to be speaking on August 26th. That is Friday. So right here, they'll be talking about the economic outlook at 10 a.m. Eastern Standard Time on Friday. This is going to be on Friday. So this is going to 100% move markets. If you're trading on Friday, be aware of this. This is going to be a very big address, and a lot will be said during it. How the markets are going to react, who knows? But that's just something to be aware of on Friday. All right, so we went over all of that. And now let's go to our compass. Before I start with the SPY and where I think things are going, I want you guys to understand that predicting the moves in the market is almost impossible. What we did last week and what we try to do every single week is we try to see some patterns forming in the market using technical analysis, and we try to predict the moves for the week. And last week, we absolutely nailed it. Really nailed it right on the head. So what we were looking at on the SPY last week was this spot here. And I'm just going to zoom in on this. This is the 200-day moving average. On the daily chart, it is also where this downtrend line hits. So right here, you have multiple confluences to go short. You have a very overbought RSI. You have this downtrend line, and you have the 200-day moving average. Every trader, every computer algorithm is looking at that. So when it touched this to the penny, we have seen the market go from 431 on the SPY to a close of 422. That's a 9-point move down. It's not the end of the world. It doesn't mean that the market is going to, all of a sudden tank to the bottom here. But coming into this week, it's very important that this area hold up. So I have this area at about, if we want to be conservative, just under the 20 EMA on the daily chart. So about 415 to this 420 level this is where we've seen a lot of support in the past, some resistance, and right here, it should act as support. All right, now you have the RSI on a dive down right now. This is all, very well predicted on our last week. Coming into this week, it's not as clear until we see how trading acts around here. If we just break through here, you have to assume that, we might be looking for another leg down. So watch this area on the SPY right here. This is the area right here, 415 to 420. See how it trades around here. If it does pull on back to this area, even the 410 area can act as a little bit of support. So that's where I think, once this breaks down, that's where I think we're probably going to be headed at some point during the week. It's a clear rejection of the trend line. The last time this happened, we saw a pullback. The market tried to get back, and then it just dumped into another consolidating period. So that can happen. It could be a little choppy. We could see a little bounces. If the yield starts to move at the beginning of the week down, maybe you see a bounce in the market a little bit before that direction is really shown. So that's the SPY on the daily. We could look at the weekly as well, but you're going to see the same picture. This down trend line was touched and then pulled on back. Now, on going back to the daily chart, you had a distribution day here on Friday. To find a distribution day, you look at the volume. Now, a distribution day is when the market is down 0.2% or more on heavier volume than the day before. A lot of people look at this to find out where the big money is selling. While this volume is not really crazy high, it is still higher than these green days and the day before. So that does give it a distribution day. The more of those that are packed together, you can really start to say, okay, we could be looking at another leg down. So that's the start of it right there. So keep those distribution days in mind as well. So that's the SPY. Going over to the Qs, this is the tech, all the tech stocks. And this is what I was talking about with the yields. As the bond yields go up, the tech pulls on back. Now, we broke out of this trend line. We broke out. We might be looking to retest that. Now, that area right here is also where the 20 EMA is and where previous support should be. So this is another thing to watch this week. We want to see how trading acts here. If trading comes back down into here, we need to see if this rally is for real. Obviously, everything looks like we're stair-stepping down and might retest lows on most charts. But if this rally is real, and this is the real start of another bull market, we're going to want to see support here. If it breaks down, then you have the 50-day moving average. And that's going to be the same thing on the SPY. If things break down, the 50-day is going to be the next area that price gravitates towards. So watch where this trades right here. It was easy last week, obviously calling an overbought market. We saw the pullback, and now this week we have to, kind of watch that price action, watch the volume each day, and see where that big money is going or if it's getting out. And these are key technicals. And also on the SPY, for everybody that says technical analysis is, useless, this was a win here for all the technical analysis that we do. All those analysts out there, this was a clear victory for us. The downtrend line, perfect to the penny. The 200-day moving average, perfect to the penny. So that is and was nice to see. Going to the Dow Jones, we broke over the 200 like we've done in the past, but then couldn't hold up. What we are at is this downtrend line that was broken, and this is a retest of it. So let's see how things trade on the Dow Jones this week. We were very overbought. I mean, this is just very clear market indicators. When you're overbought and you're on an extreme run, like we have seen a huge rally since July, you're going to pull on back. It doesn't mean that the rally has to be over. All right. So just keep this one on watch. If it does break down here, you have the 20 EMA down here and then the 50-day moving average. You have some consolidation around this area. So you could pull on back to the 420s. To the 320s on the Dow. Looking at the IWM, again, last week's video, we had shown the 200-day has acted as resistance in the past. It was resistance again. Hold on back. It was also very overbought, and it pulled on back. We also had a distribution day on the Russell. A lot higher volume than the day before, pulled on back. 190 is the support here. You also have the 20 EMA. Let's see how the market trades this week. All right, so that's the IWM. So going into some of the stocks that I have on watch this week is, and we're going to start with, give me 1 second. And we're going to start with the XLE. The XLE was on last week's watch list. And a lot of stocks that were on last week's watch list, and I'm just going to share this with you guys, take a little bit of a victory lap. Again, these, just about every single one of these was called out perfectly. So the XLE making a series of higher highs and higher lows. So energy happened to be one of those last week that actually was in the green. There wasn't many that were in the green. Energy and utilities was. So here we go. Now we made a higher high. How high does it go? Who knows? But this is still going to be on my watch list. It's following a clear pattern. All right. So XLE following a clear pattern, still remaining long on that. Amazon. Okay. Amazon. Once again, this one was on our watch list last week. Bring this up, show you guys the comparison here. Amazon 200-day moving average is current resistance. It's overbought and may break down. All right. Now, I'm not going to go over every single one of these, but these are still on my watch list because what we predicted to happen was clear rejections at the 200-day moving average. And now we're pulling on back. Closed at the lowest level since the beginning of August here. So if this does break down and breaks the 20 EMA on the daily chart, you have gap fill to 125. And if that happens, that means that the whole market has also sold off as well. A lot of charts look like they want to come and roll back over. So that's Amazon. Apple is the same way. This was also on our watch list. I'm not going to pull it up for all you that have seen what I posted last week. The rejection at the trend line. We saw it hit a high here of 176 and could barely close over this trend line that we've had for the whole year. And now we close at 171. So that's a big pullback. What I think and what I see here on the charts is a pullback to this 20 EMA, this 165, 166 area. That was our previous breakout from this bit of consolidation. Not a lot of consolidation, but it did consolidate here a bit. So you can expect, maybe price to come back down to this spot here. Maybe during this week, if that does happen, you have a market that has rolled over. So a lot of charts are looking like this. All right, so that's Apple. That's my target right there. Disney is the next one. This one also starting to roll over. You have gap fill here to 113, the 20 EMA, a perfect spot for price to come back down to. So that's Disney, Meta. This was also on our watch list last week. I had said wait for the break here. So when you have a down trend line that breaks, you have to be aware of where the previous pivot point was. And that's right here. Came up to it, rejected. So could not break it. Right now, it's at the 50-day moving average. If it breaks under this, clear shot to 154, where it's been previous support. And if that happens, it's hit it so many times, there's a chance that it can actually crack under that. So if this doesn't hold up the 50 and this down trend line that should be support, then you have a quick run to the 150s. And that's on Meta. Let's see here. The next one up is going to be the XLF. Absolutely a beautiful call from last week. Previous resistance, resistance. It was support here, and now we saw the big pullback. So this now is looking very weak to me. The market, the stocks, a lot of charts are looking exactly the same way. So that's why when you have this consolidation sort of at the top and you start to break down, the possibility of further breakdown, and you can see here on a lot higher volume than the day before, the charts definitely look weaker this week. Going into last week, they looked very strong, very overbought, and now we're seeing a healthy pullback. Doesn't mean we have to come all the way back, but to get long, I would want to see how things play out this week. All right, so that's XLF. One chart that I did come into view here with was GM. That actually looks like a nice chart. This is the first time I've seen a chart that actually looks good this week. GM has had a nice uptrend, very nice uptrend. Look at this huge volume bar on Friday, and here we are. We're consolidating around this area, and maybe we go up and try to retest this 200-day moving average eventually. Is it going to happen in one day? No, but we've definitely started that climb out of the bottom. So GM chart looks good to me. I would not want to be shorting this right now because it does look like a bullish move here. And on Friday, I like that volume. On a day that the stock market was down, this one was up over 2.5%. So that's very nice to see. All right, so we have all that, and I think that's going to do it. I hope that you guys enjoyed the video. I know it's a little long, but there is so much to get to. And anyway, hit the thumbs up for me. I'll see you back on the next one. Take care, guys.